SoFi shareholders had a great day today as the stock ripped up over 6.5% on the day as of the close, but during the day, the stock was up as much as 14.5%, nearing $25 a share. This puts the 12-month return on SoFi stock over 200%, and this gain comes on the back of their Q2 earnings report that they just released this morning before the market opened. This was another record quarter for SoFi in so many different areas of their business, and if you watched my SoFi earnings preview video, I said I expect a revenue beat, I expect an EPS beat, and I expect them to raise their 2025 guidance inside this Q2 report. And many numbers inside this Q2 earnings report were not only way above analyst expectations, but they were way above my personal expectations. And I am definitely a SoFi bull, and my expectations were way higher than analysts, and they still beat my expectations. Specifically on revenue, the revenue growth and the revenue beat that we're about to see is absolutely insane. So we're going to go through the earnings report in detail, the exact numbers that are reported and what this means for the business. And I'm going to talk about 4 things that Anthony Noto said on the conference call that made me even more excited about the long term for SoFi. I'm super excited to get into this video, but first, if you're new here, welcome. If you're not subscribed already, go ahead and click that subscribe button. We're just about to crack past 9,000 subscribers on the channel. Help us on our short-term goal of getting to 10,000 by the end of the year. I appreciate you doing that in a major way. Also, if you want to hear about SoFi and any other stock I'm buying, selling, holding, doing research or work on, etc., consider checking out the Patreon. I made a post in there recently detailing every single stock I'm holding right now, what my time horizon is with that, what I categorize that stock as, whether it's a value play or a growth play or a dividend play or a turnaround play, and I put multiple different stocks that I'm considering buying over the next few months on there as well. So go ahead and get access to that with the first link in the description or the pinned comment down there. All right, let's jump into the video. First, we're going to talk about the headline numbers they reported in comparison to the consensus analyst estimates for the quarter. Then we're going to dive into each one of the 3 business segments: financial services, tech platform, and then lending. And then we'll check out guidance. And then lastly, we'll talk about the 4 things that Anthony Noto said on the conference call that got me even more excited about SoFi's long-term vision. All right, let's jump in. Adjusted net revenue was up 44% year over year, which was a record of $858 million. That's over a $50 million beat on revenue. $805 million of revenue was expected for Q2, and they came in with $858 million. That is an insane beat. To see a 44% revenue growth number, that is absolutely ridiculous. That's the highest revenue growth rate they've had in over 2 years, which is definitely an acceleration year over year and quarter over quarter on that revenue growth rate. Adjusted EBITDA was up 81% year over year to a record $249 million. Fee-based revenue was up 72% to a record $378 million. Member growth was up 34% and product growth was up 34%, with over 35% of new products in the quarter being added by existing SoFi members, which makes the unit economics of SoFi's business model so much more attractive than legacy banks. They reported GAAP net income in the quarter of $97.263 million, up 459% year over year. And that led to EPS of 8 cents per share, up from 1 cent per share in the year ago quarter, which was a 700% increase year over year in EPS. And this now makes 7 consecutive quarters in a row of GAAP profitability for SoFi. They have successfully flipped the profitability corner, and they are growing that EPS like crazy, as we just saw over 700%. And also that GAAP EPS of 8 cents per share was a 2-cent beat per share. I expected at least a 1-cent beat, but I said don't be surprised if they report either 8 cents or 9 cents of EPS within the quarter. We got that 8 cents per share number, very respectable beat and an insane growth number year over year. All right, now let's dive into the results for each individual business segment. We're going to start with the financial services segment. This has been the major growth engine for SoFi over the past year or so. Financial services by far and away has the highest growth rates of any of the 3 business segments for SoFi. Let's check it out right here. Total revenue for the financial services segment increased by 106% year over year. I would have been happy with anything over a 60% growth number year over year. We got 106% year over year. But even crazier than that, the financial services non-interest income, which is the fee-based revenue that's specifically part of the financial services segment, was up 359% year over year. What's so special about that non-interest income is that it's so much more profitable for SoFi because it's capital light, it's fee-based, and it adds no extra risk to the balance sheet whatsoever at all. And to illustrate this, let's check out the revenue growth versus the directly attributable expenses growth. They had 106% revenue growth for financial services like we saw, but directly attributable expenses were only up by 50%. So they had over 2x the revenue growth in comparison to the expenses growth for the segment. And as we know, that's going to make the margins absolutely explode. Year over year, they had a contribution margin increase from 31% in Q2 of 2024 all the way to 52% in Q2 of 2025, the quarter they just reported. I was expecting them to eclipse 50%. We got that. We're above 50% margin on financial services now at 52%, and it doesn't seem like they're slowing down anytime soon. That is an improvement sequentially, and it's a major improvement year over year. The absolute number in terms of contribution profit for the segment was up 241% from $55.22 million a year ago to $188.232 million in the quarter they just reported. And equally as impressive and exciting is that the financial services segment revenue per product increased by 52% year over year. It was somewhere in the low 60s in the year ago quarter, and now it's up to $98 per product of revenue for the financial services segment. Very impressive growth there. Total products growth was very impressive for the financial services segment. SoFi Money was up 37% year over year. SoFi Invest was up 22% year over year. Their credit card offerings were up 32% year over year. Referred loans were up 88% year over year. SoFi Relay was up 40% year over year. And SoFi at Work was up 28% year over year, making total financial services products up 35% year over year. The one thing we're going to see on this exact chart in Q3 and in Q4 is that SoFi at Work offering is probably about to jump up like crazy because of the new deal they have with the company Paychex. I'm excited to check that out in Q3 of 2025 and in Q4 of 2025 to see what kind of impact that really has on the SoFi at Work product. For the financial services segment, I would consider this a literally perfect quarter. This is some of the most insanely explosive growth that you'll see for any business segment of any public company out there right now. Now, moving on to the tech platform segment results. The tech platform has been the lowest growth segment of all the different segments, and it's had the most margin struggles over the past few quarters. Last quarter in Q1 of 2025, we only had a 10% revenue growth number. I wanted to see that number get into the teens, and we got exactly that. The tech platform grew by 15% year over year in terms of revenue from $95.438 million to $109.833 million. Unfortunately, directly attributable expenses were up more than revenue once again. Expenses were up 19% for the segment, which made the contribution profit growth only 7% year over year, and the contribution margin dropped year over year from 33% to 30%. There is one thing that Anthony Noto said on the conference call that gets me really excited about the tech platform and the way they're treating the growth with the tech platform right now. We'll get into that here in just a few minutes after we talk about the lending segment and the updated guidance that the management team provided. SoFi signed a new deal in the quarter with Banco Nación, one of Argentina's largest financial institutions. They're using their Cyberbank digital platform to modernize their digital banking infrastructure. That's great news, but members were only up 1% year over year, up to 160 million, up from 158.5 million in the year ago period. So this is still not a great quarter for the tech platform, but it is an improvement sequentially, and it is an improvement year over year in terms of revenue. I want to see this segment get back to margin expansion, but I know they're investing heavily in R&D to make the Galileo and Technesis platforms even stronger and even more compelling to make it easier to sign new deals and retain current customers. Moving on to the lending segment. The lending segment had a very strong quarter, specifically in terms of revenue growth. Revenue was up 30% year over year, all the way up to $443.5 million, up from $340.7 million in the year ago period. Directly attributable expenses were up more than revenue at 43% year over year, which means the contribution profit was up less than revenue at 24%, not ideal, and contribution margin dropped year over year from 58% down to 55% in Q2 of 2025. Even though they had that margin contraction in Q2 on the lending segment, this was still a very strong quarter for SoFi lending, specifically in originations. Personal loan origination volumes were up 66% year over year. Student loan origination volumes were up 35% year over year. Home loan origination volumes were up 92% year over year, which made total origination volumes up 64% year over year. That is extremely impressive. And through the loan platform business in the quarter, they sold or transferred over $3.4 billion in total personal loans and home loans. And they saw their credit performance strengthening with their on-balance sheet loans. The loans that they're holding on to had their 90-day delinquency rate drop, specifically for personal loans, from 46 basis points down to 42 basis points. Total lending products growth was also strong at 34% year over year on personal loan products, 12% year over year on student loan products, and 33% year over year on home loan products. In Q3 of 2025 and Q4 of 2025, I expect student loan product ads to be much stronger than 12%. So I'll be looking forward to that with SoFi for the remainder of the year. And speaking of the remainder of the year, let's talk about guidance and outlook that the management team updated. They raised fiscal 25 guidance on so many different metrics. Let's dive into it. For full year 2025, management now expects to deliver adjusted net revenue of approximately $3.375 billion, which is $65 million higher than the top end of the prior guidance range of $3.235 billion to $3.31 billion. This applies an approximately 30% annual growth rate versus the prior expectation of 24 to 27% growth. They also now expect adjusted EBITDA of approximately $960 million, above the prior guidance of $875 to $895 million. That's a huge guidance raise there, and that represents an EBITDA margin of 28%. They also updated their GAAP net income and GAAP EPS guidance. GAAP net income is now expected to be about $370 million, which is above the prior guidance of the range of $320 to $330 million. And they now expect GAAP EPS of roughly 31 cents a share, which is above the prior guidance of 27 to 28 cents a share. They also expect tangible book value growth of $640 million, and they expect to add at least 3 million new members in fiscal 25, which would represent 30% member growth from 2024 levels. SoFi management team has done it once again, adding yet another quarter to their extremely long line over the past multiple years of every single quarter beating on revenue, beating on EPS, and raising guidance. Now, lastly, let's get into some of the things that the CEO of SoFi, Anthony Noto, said on the conference call. The first one, they were talking about all the product innovations they have, a few of which being the consumer-facing crypto platform, SoFi offered stablecoins, staking features, and blockchain-enabled international money transfers. And specifically when he was talking about the growth potential of the international money transfers, he said, you can just imagine the day when SoFi goes international and people are sending money from abroad into the United States, and the kind of growth potential that SoFi is going to see specifically inside those international money transfers, because they're going to happen so much faster than so many different competitors, with the goal being near instant transfer and settlement of funds on well-known blockchain networks. And the next thing he said when he was talking about all the growth that SoFi had in Q2 and all the insane product innovations they're making was that they are on their way to becoming a top 10 financial institution. That's what SoFi's management team is focused on, making SoFi into one of the largest and most important financial institutions in the entire world. And based on everything I've seen over the past many years of being a shareholder, I believe that this management team has the tools to make that a reality. And the next thing Anthony Noto said on the conference call was in relation to an analyst's question. And their question was basically about short-term growth rates for the financial services and the tech platform. And his answer was basically, I'm not so worried about the short-term growth rates. Clearly, it's working. They have over 100% financial services growth right now. They have accelerating tech platform growth right now. They are doing everything they need to do in order to pull the correct growth lever at the correct time to put the business in the best spot. But the way he responded was by saying, we're way more worried about growth over the next decade than we are growth over the next 1 to 2 years. And then another question that was also about tech platform growth, he mentioned that he's not so worried about the next 1 to 2 quarters, but rather he's looking to make deals with companies that are going to last for decades, and they're going to lead to very strong, durable growth with customers who actually see the value in the tech platform, Galileo and Technesis, and they're going to be able to use it in their business for many, many, many years to go in the future. It makes me much much less worried about the lackluster growth we've had with the tech platform and the high expenses that we've seen with the tech platform. They're investing in R&D to improve the Galileo and Technisys platforms to make them more attractive to customers that they want to hold for the next 5 to 10 years. All right, I was literally just about to wrap up this video. I was like done recording. I was about to turn it off. And then I checked where SoFi stock price was, and they actually dumped hard in the after hours, down 5.62% as of recording this video, which means the stock is basically flat on the day and it has erased all the gains because SoFi just announced a secondary offering. If you don't know what a secondary offering is, they are putting more shares onto the market, which dilutes shareholder equity and hurts overall returns. If you're a long-term shareholder of SoFi, this puts their balance sheet in a way better spot and allows them to fund growth without using their current capital on hand. If you're a long-term shareholder, this is really not a big deal at all. But if you're a short-term shareholder for SoFi, I can imagine this would be very frustrating for you. But I will say this does not worry me whatsoever at all. It is not uncommon for a stock that has ripped higher. SoFi's up about 200% in the past 12 months. This is definitely not uncommon. This is something that Tesla did multiple times in the back half of 2020 when their stock was ripping and soaring higher. My general opinion on secondary offerings is that they're not good for the short term, but they can be totally fine for the long term, assuming the company is going to use the proceeds to fund growth. Based on everything we know about SoFi's management team, they are very good at creating durable growth, and they're going to use this $1.5 billion of cash that they're going to raise roughly to expand the business in ways that are going to bring about way more revenue and way more net income over the next few quarters and next few years. So if you open your account and you're confused about where all your SoFi gains went for the day, that is what happened. They are capitalizing on this ripper rally in the share price and raising roughly $1.5 billion of cash. Let me know what you think about this Q2 earnings report in the comments below, and definitely let me know what you think about this secondary offering that SoFi just announced. I look forward to seeing your comments down there. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys. So go down there, let me know what you think. I appreciate you being here in a major way. Thank you so much. Have a great night.